So now we are moving to our last point, which is the types of what? Market structure. In trading, we have what? Three main types of market structure, namely a bullish market, a bullish market, a bullish market, a bearish market, and a ranging market. When we talk about a bullish market, we are simply talking about a point or a situation in the market where market what is moving upward. When the market is moving upward, we call it what? A bullish market. Maybe you've come across it somewhere, but you don't really understand it, all right? What a bullish market simply means is that market is moving upward. Also, when a market is moving downwards, we call it what? A bearish market, or a bearish market simply means a point or a situation where market is what? Moving downwards, or when an asset is moving what? Downwards. It is called a bearish market. So you can be in a group, you can find yourself in a trading group whereby someone may be saying that this market is truly, or this market is really what? Bearish. What the person is trying to say is that the market is what? It keeps going what? Downwards, or the market keeps moving what? Downwards. That is all. And also, when you talk about a ranging market, what we are also saying, or what it means, is that a situation where a market is consolidating within a specific what? Area. That market is not giving a clearer what? Direction, whether it's moving downwards or whether it is moving what? Upwards. All right, it keeps on consolidating in a specific range, or in a specific what? Area. That is all about a bullish market. Now in trading, we don't just look at a chart and just say that, oh, I think this particular chart is moving upward or downwards. Even though at certain points you can identify, or you can just look at the chart and notice that, oh, this market is what's going upward. But in trading or professionally, that is not how we do it. All right, we apply the concept of what? Swings, to be able to identify, or to be able to map up a market structure to identify whether it is bullish or bearish. Or before you can say that what it is, market is bullish, there are some kind of confirmations, all right, that tells you that this market is what? Bullish. So let's start with the first point, and how we can identify, or we can map up a bullish market. So first, we have a bullish market. First, we have a bullish what? Market. We have a bullish. We have a bullish market. Now, in a bullish market, we say market forms, or the swing formation on a bullish market is a higher high, a higher high, a higher high, and a higher high, and what? A higher lows. A higher highs and a higher lows. We discussed this a little bit in our previous topic. So what does it mean when market is forming a what? A higher highs and what? A higher lows. All right. In a bullish market, what market does is that the swing formation, the swing point formed, is higher than the previous one. All right. Or market, when market creates a swing point higher than its previous one, we say market is forming what? Higher highs. So for instance, if we take what? This particular chart over here, we have what we called a higher low. This point can be called, or this point are what can be classified, or the swing point below are what we call the higher lows, and the swing point above are what we called the swing point above are what we called the higher high. So in a bullish market, what we say is that when market creates or when market form a swing high higher than its previous one, this previous high over here, all right, we say market has formed a higher high. This swing over here is what a swing high, and this one is what a swing low. Now market was pushed back by this swing point over here. Do not what go below this particular one, all right, making this one what a high, all right, making this one a high, but it is lower than this previous what swing point. So market then create this particular swing point, which is also higher than this previous one. So this one becomes a higher high, whilst this one remains what a high. This one is what higher than this one. This one is higher than this one, but lower than this one above. So this one becomes what a higher low, and then market what pushes backwards again, but fails to what go below this particular point, all right, making this one higher than this particular point, but it is also lower than this one above. So this one becomes what a higher low, whilst this one being higher than this one, all right, becomes what a higher high. So when markets keep forming this particular swing point, we term it as what a bullish market, all right. So when market forms what a high which is very higher than this previous one, all right, and a lower which is higher than its previous what low, it is called a bullish market. So we have what we have a higher high, we have what higher high, higher high, we have our higher highs, we have what a higher highs, higher highs, and also we have what higher lows, and we have what higher lows. So all the swing point above, can be what classified as what higher highs and higher lows. So when markets keeps on forming, all right, swing points higher than its previous one and swing lows higher or above its previous what low, all right, we say market is forming a bullish, or market is what forming a bullish market, or market is what bullish. That is how we identify what a bullish market. So a higher high means what a swing point higher than its previous one, and a higher low means a swing point, all right, higher than its previous what lower point. You could see that all the lows are higher. This one is higher. It doesn't what go below this particular point. That makes it what a higher, but it is lower than what this one above. That is what makes it what a low. So when market keeps on forming what a swing point like this, we term it as a bullish market, or it can be termed as what a bullish market in trading. Now let's what move to the next one, which is what a bearish market, which is also just the opposite of what a swing low. So when you talk about a bearish market as well, So when we talk about a bearish market as well, we can have all right. So a bearish market is also, like I said, we said during the definition is what a point or a situation where market is what moving downwards, where market is moving downwards. And the swing formation, all right, the swing what formation is we say market forms what we call a lower low. Ooh, all right, let me just do it somewhere around this area. So for a bearish market also, for a bearish market, we say that market forms what we call a lower lows and lower highs. Its swing formation is what? Lower lows and lower highs. So what does it mean when market is what? Forming lower low? So this is a bearish market. The market is bearish. Bearish equals moving what? Downwards, a bearish market. Moving downwards. Its swing formation is what? Lower, lower lows and lower highs. Lower lows and lower highs. So when we talk, we can also what? Just use the abbreviation LNH and also the L and what? LNL. That is how you may identify, you may see them on some websites. That is if you go to check on some website as well. So when you talk about a lower low, we are talking about a point or a situation where market makes what, or the swing point created is lower than its previous one. All right, this swing point over here, this swing point over here, this swing point over here, this one is lower than this one, making this one a lower low. All right, and the next swing point created is lower than the previous one, which is this one, making this one what? A lower what? Low. And what does a lower high also means? Now, this swing point over here can be identified what at the top, but the next one that was formed, all right, was lower, all right, than this previous one. So this one becomes a lower, but it is at the top run, so making it what? A lower high, and also it is above this previous one, this one at the bottom, making it what? A high. So the swing formation or the swing point that is forming is lower than the previous one, all right, making it a swing low. That is how we term what? The swing point. So on this particular what chart, we can what on this particular chart, if we want to map up the structures, we can have what? Our lower highs, lower highs, our lower highs, and our what? Lower, and our what? Lower lows for a bearish, what? Market. That is how we map up our what? Swing point, or that is how we identify our type of what? Market structure in trading. So we are going to move on to the chart. We talk about the last point, then we move on to the chart to map up the what the structures on the chart, or properly so that you can what actually understand it, that it is the same concept that we apply when we are what trading. So the last point is what the ranging market, and I said that a ranging market is a point where market what is consolidating. It doesn't give, or it does not give any clear what structure, or it doesn't show any clear what direction that market is what moving. And in a ranging market, we see that market forms what we call, in a ranging market, we say that the swing formation is what equal highs and equal lows, equal highs and what equal lows. A ranging market, and market forms what we call what equal highs. Market forms what we call equal highs, equal highs and what equal lows, meaning that the structures formation or the swing point are at the same what level market, or the swing doesn't what exceed or go above or below the previous one, making it what forming at an equal what point. That is how equal highs and what equal lows, equal highs and equal unequal lows. That is the swings formation when it comes to equal lows, when it comes to what a ranging market. All right, and this is how a ranging market will also looks like, or this is how we map up. So market keeps on consolidating within the range, as you can see. So the swing points keeps on forming within what the same level. All right, it keeps on forming within the same level. It doesn't go beyond. It doesn't go beyond what the previous one. On live markets, it can just exceed it a little bit. All right, but it keeps on what coming back. Also, it keeps on forming within that particular what range. That is when we say market is forming what equal market is what is in a range, and the swing what formation is what equal high. So the highs above are classified as what the equal highs. The swing points above are classified as the what equal highs, are classified as what the equal highs, and the swing points below are also classified as what the equal lows. So these are the three main types of what market structures in trading, and how you can what map them up what properly and professionally as what a forex trader. So let's move on to the chart, and let's see if we can what identify, or we can what identify the trend or the direction of the market, or of a specific market. Now, if we take this particular chart over here, this particular one, this is Euro USD, and we are on the 30 minutes, on the 1 hour what time frame. So first we are going to identify our swing point. So if we look at this particular chart, we can map up our swing point like this, from this area to this area, to this area, to this area, to this area, to this what area, and to what, to this area. So what can we see? We could see that first, the swing point formed over here. This one was lower, although this one is at the top, but lower than this one. So this one becomes what? A lower high. The swing point becomes what? This one becomes a lower high. This one becomes what? A lower high. This one becomes a lower high, a lower high, a lower high, and also this one becomes what? A lower low. We have what? A lower low because it is lower than what the previous, so lower low. Now, when we go over here, we will see that market forms another swing point, but this one doesn't what exceed this particular one. So this one also becomes what? A lower, another lower high has been formed. Another lower high has been formed. And this one or the next swing point is also what? Lower than this particular, what? Low. So clearly we can see that this particular swing point, this particular market is what? Bearish. This particular swing or this particular market, this particular market is what? A bearish market. Is a bearish what? Market, or a downtrend, a bearish market, or a downtrend, or what? A downtrend. Also, let's see if we can identify a bullish market. Let's try on another pair and let's just see if we can identify a bullish market as well. So when we take this particular asset, let's see if we can find or we can see also, if we decide or if we map up structures from this particular asset as well, so the swing point, when we start or if we decide to map up swing point as well, we can have something like this. We can map up our swing point either to here, all right, and on and on and on as well. So if we consider this market, let me expand it a little bit. So if you consider this particular what? Market, we can see that we are having what? We are having what? A higher high. We are having a higher high over here. Over here, we have a higher high being formed. Market forms what? Oh, what is the meaning of this? Market forms a higher high, and we have a higher, low, because this low is higher than this particular one. Then we move on to the next swing point. We move on to the next what? Swing point. Also, we have a higher high, and we have what? A higher low, because this one is also what? Higher than this particular one. Then we formed another what? High over here, and the low as well. So this particular one or this particular market can also be termed or can also be considered as a bullish market, because when you look at the swing formation from this particular point, you could see that market keeps on making a higher high and a higher low from this particular point we may have, or market can what? Just pull back again. We can have maybe market from this particular point to go upwards like this, and the structures what keeps on forming, structures keep on forming. So this is also what a bullish market. This is also a bullish market, a bullish market, or an up or an uptrend, all right, or an uptrend what market. And the last part is what? And the last part is what? A ranging market. Let's see if we can find any point in market where market was what? Forming equal highs and what? Equal lows, or market was consolidating. Let's try a different word pair and let's see. Um, so we want to try to identify if we can get any ranging market. Not clear on this particular pair. Let's see if we can what? Find another one. All right, so let me clear my chart from this particular one. So on this particular pair, if we check this particular area, you see that we have a swing point market what move from this area to this area to this area, and now to this area and to this what area we are having. So you could see that the swing formation at this particular point are at the same what level. All right, the swing formation at this point are what the same what level, what are the same level. So now market isn't giving us any clearer what move. All right, any clearer move. Market just what keeps ranging. Market just keeps on reversing from the swing what area. So this is also what a swing area. Sorry, a consolidating market or a ranging market. So this market is what a ranging market, and its swing what formation a ranging market, a ranging what market is ranging, and also a ranging market and the or a consolidating market, and the swing formation is what equal highs, equal highs, what equal highs, equal highs, and what equal lows. So this is all about market what structure, or this is all about the basis of what market structure, and how you can what actually what map up market structure professionally as a what forex trader. Even if you are new to what trading, this particular video is going to help you to understand what market structure and how you can what apply it, or how you can do it professionally as what a forex trader. Please, if you like this particular video, kindly click on the like button Also click on the word subscribe button and also click on your notification icon so that you are going to get every single video that we share on this particular channel. Share this video to your trading friends and let's keep on learning together. See you in our next lesson.